For more now on the housing market in China and how it's been affected by the pandemic, we're joined by Robert Ciemniak. He's in Hong Kong. He's also the founder and CEO of real estate Foresight. Robert, they used to say location, location, location. I guess in this case it's timing, timing, timing. I mean, these pandemics and the latest outbreak coming at terrible times, and also the double whammy that Rory was talking about, campus restrictions, a lack of job opportunities for these young people, that can really cool the market. Give me a sense of how you see things out there right now.
So for Hong Kong, I think it's too early to tell. There are still many factors to consider. So I think we need to wait and see how people react. I think on the mainland, if you look at the data, the latest data, the story is very clear. So for the sales volumes of new homes, May and June data show that we are at the higher levels than in any of the last 4 years. So clear recovery. But if you look at it on a year-to-date basis, we're still down around 8%. You may see a little chart behind my back. That's sort of the bounce back you see there. The red line is still in the negative territory, but much better than minus 40% where we were in the beginning of the year.
You surprised at those numbers?
We published a note to clients on February 4th in terms of what we had expected then to happen. And I can tell you that sales volume-wise, it's exactly what we expected. But we actually thought there would be more pressure on prices as a result. But the house prices actually picked up very quickly. So you've seen a sequential pickup in month-on-month growth for the last 4 months after the February sort of short drop. But you still see a slowdown on a sort of year-on-year basis, right? So not really surprised. Had expected actually a bit more downward pressure. But the market seems to be quite resilient.
You heard in Rory's report how some rental companies are now using VR. They're also lowering rents. Do you think they're doing enough in terms of incentives to address this problem? They are having some issues putting folks into these rental units.
Yeah, look, the rental house, when you think about rental housing in China, and also if you can watch it from the US perspective, it's very different. Like China doesn't have what you would know as a multifamily or apartment sector properly developed, right? It's still very fragmented. It's in the early stage. It's what China wants to develop over time. So it's really hard to gauge just by looking at specific anecdotes. Some indices we watch for suggest, rentals in China down a bit, single-digit down for year-on-year, but it's really harder to gauge. In terms of incentives for the new home sales, it really varies. So, when we talk about recovery in aggregate, it varies sort of the complexity underneath the heterogeneity, like how different the story is in different cities. And yes, you've seen big discounts by major developers that boosted their sales, but some others have not done that, right? So it's a story of diversity, of fragmentation and differences between cities.
So talk to me a little bit more about the fragmentation. What are you seeing? I mean, we're talking about Hong Kong. You mentioned Hong Kong, Beijing, Shanghai, some of the other cities. Are there a lot of variance there?
Absolutely. It's actually not a new theme, right? So diversity across cities has been driven by a shift in policy to be much more differentiated between cities. It started even in late 2016. And what the policymakers try to do is basically moderate, stabilize the market. So if it's getting too hot, then they will put on restrictions, price caps, purchase restrictions, and so forth. If it's getting difficult, they will ease that or unrestrict. And in that way, the market is moderating, right? So sort of there's fewer extreme movements. But still, you see, if you look at individual cities in the 70 cities that NBS publishes indices for that were released the latest for yesterday, the year-on-year growth ranges from +16 to -5, right? So there's quite a variety there. We've seen new policy restrictions that tightened the market in Shenzhen just a few days ago. There are stories about Dongguan imposing new, Ningbo, Hangzhou, on one hand. On the other hand, in many cities, in lower tier cities in Yangtze River Delta, you have it's much easier about buying property and in those cities that are supported through the hookah reforms. So there is a lot of complexity underneath, and then if you overlay that with the city cluster development model of urbanization that China is pursuing, you have all these sort of satellite cities that are emerging, which are very different from those that they are drawing people from, right? Or from the major cities where inflows of people are meant to be more restricted. So these factors contribute to that diversity.
One final question, Robert, before we let you go. You do have that chart behind you, a lot of spikes there, some squiggly lines. What does it say? I mean, Sonia, talking about the second quarter, the numbers are up. What does the housing market tell us about the economy and the robustness in China, do you think?
I think it tells you that what we saw was no doubt a short-term shock that created a big drop, but it quickly bounced back. Not fully recovered, but it's on that path. It's heading for maybe even, we think, positive growth for the year in terms of volumes. But if you go back to where we were before the COVID-19 happened, it's sort of a managed slowdown, right, from previously very high levels. And it's all about stabilization. And that shows in those aggregate numbers. So that V letter you see behind me, but still on a year-to-date basis, still some losses to make up for.
Robert Ciemniak joining us from Hong Kong. Thanks so much for your analysis.